All right, so let's proceed and get started, right? Now, the first topic in this technical analysis class, the first topic is we're going to be dealing with is market structure. Market structure is the first topic that we're going to be dealing with. Now, it is very, very important that you understand market structure as a trader because market structure is like the basics of technical analysis. Market structure is like the basics of technical analysis, and if you don't understand market structure, it's going to affect every other uh, part of your technicals. Now, market structure is basically how price moves, right? Make sure you're taking notes, make sure you're following as well. Market structure is basically how price moves in the markets. Now, there are three ways that price moves in the markets. There are three ways that price makes its movement, right? The first way is what we call our uptrend. You might be familiar with the word uptrend, downtrend, right? Now, those are types of ways that market moves. Like I said, there are three ways that market makes its movement. We have the uptrend, which is the first way. We have the downtrend, and we also have the ranging market or a consolidation market. So those are the three ways. Now, I'm gonna show you guys and give you guys example in the chat. Now, only on an uptrend, this is how you see, this is how you get to know, or this is the pattern for an uptrend market, right? This is what it is called, and this is how it looks like. Now, an uptrend market is made up of what? Higher highs and higher lows, right? This right here is your higher low. This zone here is your higher low. Let me be marking it. This zone here is your what? Higher, your higher low. Let me just mark it, right, tap it as HL. That type. Let me not waste much time. Now, this zone here is your higher low, right? This zone here is your higher high. This one is your higher low again. This is your higher high. Now, an uptrend is just going to be maintaining that series of higher lows and higher highs. That's how an uptrend pattern is. Price must give you a new higher high and a new higher low. And it must give you a new higher high again and a new higher low, and still maintaining that same trend. A new higher high, a new higher low, a new higher high, a new higher low. This is the pattern for an uptrend. An uptrend is made up of what? Series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, and it must maintain that trend. And if you draw your trend line, right, you're gonna see that it literally what connects. That is to say that this is a clear uptrend pattern, which is the first type of way that price makes its movement. The second way is what we call the downtrend, which is basically the opposite of the uptrend, right? Or in the downtrend case, we have price giving us series of lower lows and lower highs, 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 So that is how a downtrend makes its own pattern, right? It must give you series of a lower low and a lower high. It must give you a new lower low and a new lower high, a new lower low, a new lower high, and it must maintain that downtrend pattern. That is how you identify a downtrend, which is the second type of way that price what makes its movement, right? The first one is higher as the uptrend. Second one is the downtrend. The third type of way that price makes its movements is what we call a ranging trend or a ranging market or a consolidation market. Now, what that means is literally the market's moving from one point to the other. So it is just bouncing off from a it's just bouncing off from point one, point A to point B, right? It's bouncing off from resistance back to support, back going back to the resistance. So it's literally in the same zone, right? It's not really making any uptrend or downtrend pattern. It's just consolidating. That's what we call a ranging market. So this is the third type of way that price makes its movement, right? But here, right, over here, we just pay attention, or I pay attention to just these two type of price movements, which is either the uptrend or a downtrend. If price is giving me, if I see a market or a chart giving me a ranging market, I avoid it because it is not clear. Like the market can literally break out to the upside, or it could literally break out to the downside. So it's just gathering liquidity and you don't know where its next move could be. So to be safer, you want to, be finding your trades or looking to be in the market or getting a trade when market is either giving you an uptrend movement or a downtrend movement. So these are the three types of ways that price makes its movements, right? Let me know if you guys are following me. Let me know if you guys are following me. Are you guys following me? Are you guys following me? Hope you guys are following me. So these are the types of ways that price makes its movement, right? Now, there are two things, right? There are two things that you should look out for in every trend. In any in any type of trend that you see, either an uptrend or a downtrend, there are two things that you should be looking out for in the market. Now, it is either you're looking to join the trend, which means you're looking to continue in that trend, or you are looking to take a reversal of the trend, which means you're looking to trade against the trend. Now, what that means is that if maybe you come and you see the market in a downtrend and an uptrend pattern like this, for example, for you to join this trend, it is either or for you to for you to like get in a trade on this particular trend, for example, it is either you're looking to join the uptrend movement or you are looking to start taking a trade in a downtrend, which means that you want to start selling the market because this is literally an uptrend. So for you to either take a trade in this trend, you need to either be looking out to continue the trend, which means you want to continue buying, or you want to oppose the trend and and take a reversal and start selling, which means you're now taking an opposite, you're now trading in the opposite direction, right? So those are the two things that you look out for in a trend. Remember, I'll repeat again, in a trend, in a trending market, either an uptrend or a downtrend market, it is either you are looking to join that trend, to continue in that particular trend, or you want to take a reversal, which means you want to take a trade in the opposite direction of that trend, right? Now, you need to um you need to be able to know which one to use. And I'm going to teach you the concept that you use to either join a trend or taking a reversal. and you are to trade in line with whichever the market whichever one the market presents to you. If the market presents you an opportunity to take a reversal, you trade in the opposite direction, you take a reversal. If the market presents an opportunity for you to join the trend, you use the concept of joining the trend to continue in that trend, right? Now, for a reversal trend, or for you to join a reversal trend, or for you to take a trade and or to reverse a trend, the concept that we use to for a reversal market is what we call market structure shift. Some people call it change of character, right? So the concept that we use to for a reversal market or in a reversal market is what we call market structure shift. And let me explain to you what that means. For example, if maybe we had a downtrend, remember the structure for a downtrend. That is why I said structure is always very important, right? So if you see a clear structure of a downtrend, your higher highs, your higher low, sorry, your higher lows, your lower lows, your lower highs, 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 your lower lows. Now, this is a downtrend, right? Now, if I am seeing a chart like this, a chart pattern like this, what I might be focused on for now, since it has already been giving me a long uh bearish pattern, right? What I'll be looking out for is to be able to take a reversal for me to start looking to buy. Because this trade is on a downtrend right now, and it has been on a downtrend for a long time, following a clear downtrend pattern. And for me to actually want to now take a trade in this particular scenario, I would want the market to give me a sign to reverse the market, right? And for me to do that, I need to see this concept in the market, which is what we call a market structure shift, which is something like this. Now, a market structure shift is when the market literally opposes the trend. So a market structure shift is like it's an indication that this particular trend is about to end and a new trend is about to begin. And you identify a market structure shift in a downtrend, for example, the last low needs to take out the last high that was formed. Now, if this was going to continue being a downtrend, it would have given us a new lower high, right? And then continued in that pattern if this was going to continue to be a downtrend. But in this case, that didn't happen. Instead, what we saw is that this last low came and took out this last high with a candle body. Now, the last, it's your market structure shift must occur or must take out your last high or your last low, whichever trend, with a candle body. If this was a week and then the body stopped here, it's not a market structure shift yet until the body has taken, even though it's small, even though the body closes above this high, small like this, it's a market structure shift. If it closes long enough, good and fine. But if it passes with a wick and not with a body, it is not a market structure shift, or you cannot mark it as a market structure shift yet. So that's how you identify a market structure shift, right? Because this is literally a sign to now reverse this trend. This trend was on a downtrend, but this market structure shift alone now is a sign that you can now reverse this trend, and you can start looking out for what buys, right? But you don't just jump in like that. You have to wait for other criterias, which we are going to also discuss. Now, before we proceed, I want to teach you guys the concept of um order blocks and breaker blocks. I would have started with that, right? Now, in every price chart, right, you're going to be seeing other blocks, you're going to be seeing breaker blocks. Or maybe you might have heard of the word other blocks, breaker blocks, but you don't really know what it means. Now, let me explain that to you. An order block is a zone in the market where is a zone or is an area in the market where there are a lot of institutional orders that are being placed, right? It could be a buy order block, it could be a sell order block. But what that means is that it's an area in the market where there are a lot of institutional limit orders that are being placed. Now, if it is pushing price to the upside, that area is what we call a buy order block. If it is pushing price to the downside, that area is what we call a sell order block. Now, let's give an example here. Now, you can see this zone right here is what pushing price to the downside, right? So at this area here, you're going to have what we call a sell order block. This area also is pushing price to the upside, right? And at this area here, we're going to have what we call what a buy order block. Now, this area also is what pushing price to the downside. We're going to have what we call a sell order block here because it is pushing price to the downside. Now, this area that's pushing price to the upside, we're going to call it what? Our buy order block. Same thing, same thing, same thing, same thing all throughout, right? Are you guys following me? Are you guys following me? So it means that at this point, we have what? A buy order block, right? And at this point, we have what? A sell order block because this place right here will most likely what push the price down. Now, that is for other blocks, right? Now, we also have what we call a breaker block. A breaker block is a failed order block, which means that a breaker block was once an order block, but it failed to hold, meaning that when price got back into that area, it was supposed to respect that area, but it did not respect, it failed. So that area will no longer be called an order block, but it will now be called a breaker block. An example is this. Right here, we have a sell order block that's pushing price to the downside. Right here, we have a buy order block that's pushing price to the upside. Here, we have a sell order block that's pushing price to the downside. Now, mind you, there was a buy order block here that was pushing price to the upside. So it means that when market was approaching that area, it is supposed to what? For it to still be an order block, it is supposed to have respected that area and pushed up, but it didn't. It was instead it broke past that area. So you can no longer call this area an order block again. You now call it what? A breaker block, right? So that is now where you now have a breaker block. Are you following me, guys? Are you guys following me? So here you have your breaker block. Here too, you have your breaker block here because this zone was once an order block that was pushing price to the upside. But when price approached that area, it failed towards respect and push price back to the upside, but instead it failed, right? So that's now a breaker block. This also is a breaker block because it broke. This also what is a breaker block. Now, we still have our other blocks here because they've not been price has not gone there and taking it out. So all this zone is still a valid breaker block, sorry, other block. This is still an other block, this is still an other block, this zone is still an other block, this zone is still an other block, right? Now let's say peradventure price came here and what? This is an other block. Normally, when price gets here, it should respect it and what react from there. Why? Because here is an order block. Now, this zone was once uh an order block that's pushing price down, right? This zone respected, so this is still a valid order block. But you see here, when once price was approaching this once existing sell order block here, it what broke past it. So now this zone 2 is now what a breaker block. Why?
Become
It failed to hold
mhm.
markets and from going up past it. It was supposed to push price down, but it didn't. So we have a breaker block here. So just have it in mind, whatever zone that was an existing order block that failed to hold is now what we call a breaker block, right? But so long as the zone, it did not break past, the market did not break past it, or maybe price went there and respected it, those zones are still order blocks, right? Hope you guys are following me. Let's proceed. So I hope you now understand um, order blocks and breaker block concepts. Hope you can be able to identify an order block and a breaker block. Let me give an example quickly in the chat. For example, here, you can see this market is on an uptrend right here. You can see your higher lows. You can see your higher high. You can see your higher lows, right? Now, you can see your higher highs, you can see your higher lows. So now this zone is what? Is an order block, right? This zone right here is also an order block, right? You can see your higher highs, you can see your higher lows, you can see your higher highs. Now, market has what? Market came back to this order block that's pushing price to the upside. But when once it came back there, it didn't respect, it broke past it. So this zone right here, this area is now what? A breaker block. Do you understand? This area is now a breaker block. It's no longer an order block. Let's give another example. So I want you guys to understand the concept of order blocks and breaker blocks. Let's also give an example in another area. So here you can see, well, this is an uptrend. You can see the higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, like that. So all these areas, you have what? You have other blocks in all these areas. This is a breaker block, right? This is a breaker block. Why? Because this is pushing price down, but when market got back to this zone, it broke past it. It did not respect. So at this area, what you have a breaker block here, right? Same thing also with this although the candles are big, so your breaker block might not be all that clear.
Mm-hmm.
You
Mm-hmm.
always you definitely see this area here is an order block, right? This is an order block that's pushing price to the downside. And you can see market did not go to break past that. So here is still valid to be called an order block.
Mm-hmm.
This zone right here was what? Pushing price to the upside. You can see this zone was pushing price to the upside. But when
Mm-hmm.
price came back there, it didn't respect. It broke past it, right? So you can no longer call this what? This zone an order block, but now a what? Breaker block. All right. Hope you guys are following. So now I've shown you guys order blocks and breaker block concepts. Then we can now go ahead and proceed. Now, also to add to that, there are types of order blocks in the market. There are types of order blocks in the market. Well, there are mostly two types of order blocks there are two common types. Let me use that word. There are two common types of order blocks in the market. All right. Now, remember that you can either have a bullish order block or a bearish order block. You can also have um yeah, you can have a bullish order block or a bearish order block. Now, for the bullish order block, there are mostly two types of bullish order blocks that occurs in the market. The first type of bullish order block that occurs in the market is what we call the bullish engulfing candle. the bullish engulfing order block. How that is it's actually a candlestick pattern. How that is this is how this is how the order block usually is. First off, you see a small bearish candle. Let's assume this is a bearish candle, right? The next thing you now see is what? A long what? Bullish candle that engulfs it. Engulfing it means that it closed above it with a body. So this is what your bearish candle, and you have the next candle that comes up is a bullish candle that closed above the body. You can see where it closed, right? That's an example of a bullish order block. Let's see if we'll find an example of a bullish order block. Uh, let me see real quick. Let me see real quick. Okay, so can you see it here? This is a daily time frame. Can you see here? Here we have what the last candle was what? A small bearish candle. Then the next thing was a long bullish candle that engulfed that bearish candle. So here is what we call what? Bullish engulfing order block or bullish engulfing candlestick, which is an order block. So this is like I said, is a common type of order block that occurs in the chart. If you go through, you see many scenarios of bullish engulfing order blocks. The next type of order block that we have in the chart is what we call the morning star candlestick. That's another type of order block, right? That's another type of order block candlestick pattern. How that looks like is, first off, you see a small, let's assume this is a small bearish candle, right? Let's say it has a small wick, right? It has a small wick on the body. All right. The next thing is now what? You now see a small bearish candle, right? Like this. You still see a what? A candle again. A wick rather. This is your wick. This is how it usually is. A morning star order block. This is how it usually is. So this is usually what we call your liquidity sweep. So this is how a morning star candlestick pattern looks like, which is a very strong order block. Now, this is how it most of the time actually is. The first candle is made up of three candles, sometimes four. Sometimes it could be four candles. So this is how it usually is when it is four candles. You see your bearish candle, then you now see your liquidity sweep candle with the wick, right? With the wick taking out the source. This is the source candle. So let's say the body of the bearish candle was bigger. Sometimes it's usually like that, and then maybe the third candle will not engulf it. Sometimes it will now be the fourth candle that now engulfs it. This is also it's mind you, because I'm drawing it like it's the gaps, the spaces are wide, but you will not really see it as wide like this in candlesticks. But this is how they usually are, right? And then you see the wick of the candle. This is also a morning star candles, a morning star order block, right? So like I said, sometimes it's made up of three candles, sometimes made up of four candles, but this is how it looks like, right? So now if you on this kind of order block, if you want to pick your entry, you pick your entry from the body of the bearish candle before that source candle, right? For the if it's made up, if the order block is made up of three candles, if your Morningstar order block is made up of three candles, you pick your entry from the body of the bearish candle before the source candle. Now, if it's made up of four candles, right? If maybe it's the fourth candle that eventually, because the fourth candle, because a candle must engulf your bearish candle before the source candle. This is your source candle, right? Now, if in this case, maybe it is the fourth candle that does that, you pick your entry from the body of the source candle, right? And not from the body of this bearish candle before the source candle. You pick your entry from the source candle instead. Do you guys understand? So let's see if we can spot out an example of a morning star order block. And I think I'm trying to remember what currency pair I saw it last. Can't really remember what currency pair I saw it last, but let me check if we'll find that on the rupee NZD. Let me see. I don't want us to spend much time, right? But yeah, I think we'll look for more examples in the next class. But this is a type of order block candle that we have for the bullish side, right? And for the bearish side, it's just vice versa. The two most common order blocks that we find on the bearish order block is what we call, first off, the bearish engulfing. Remember, on the bullish side, it was bullish engulfing, but in the bearish, it's bearish engulfing. And how that is you literally see a small sell candle, right? Mm. You literally see a small buy candle rather, and you see what? A long sell candle that engulfs it. So let's assume this is your buy candle here. And then the next candle that comes up is now your sell candle that engulfs it, which means like it takes it out with a body, right? That's an example of a bearish engulfing candle. So, and when you're picking your entry from that kind of order block, you're picking entry from the body of the bullish candle before the bearish engulfing candle. So let's give an example. So for example, you can see here, this is a typical example of a bearish engulfing candle. Now, because the wicks are long, right? That's why we're marking our entry from the wick, right? But if the body is uh quite big and then you just have a tiny wick, you just pick your entry from the body. So this is an example here, right? Let's also see if we have another example. So that's it. The next type of order block for the bearish engulfing is the evening star. Just like the morning star, we also have the evening star. The evening star is just, I just saw one right now. This is an example of the evening star, right? First off, you see what? A small bullish candle. The next thing is you see your source candle, which is a small sell candle that will actually have a wick, right? And then the wick is now longer than this bullish candle wick. And then you see what the next candle is now a bearish candle that now engulfs everything, right? Now, when you're picking your entry from that, you pick your entry from the body of that bullish candle, the first bullish candle that started it. So this is a typical example of an evening star candlestick pattern. So this is also a very strong order block for a bearish order block. So these are the two most common types of um, order blocks that we have, both bullish order blocks and bearish order blocks. Do you guys understand? So here we also spotted another bearish engulfing order block, right? Here we also have another evening star order block. So guys, I hope you guys paid attention. This class is about to end very soon. So I think we're going to continue from our next class. But if you have any questions, you can come to my DM, ask all your questions, and I'll give you answers. So have a great night. I'm going to drop the recording for you guys in your DM.